Guys, welcome back to the channel, welcome back to a new video. If you are from America, then I hope you had a great 4th of July. The rest of the markets was open, like Asia and Europe, and a lot of people were trading. As you know, with crypto, the show goes on 24/7, and we had some very interesting price action yesterday. Before we're going to dive into the charts, please do me a favor, hit that like button, subscribe, click the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Also, feel free to check out all the links in the descriptions. Let's get it. We are first starting off here with the BTC USD pair on the 4 hourly, and what you're seeing right here, this was the pump from yesterday right here to the top, and now we are going lower. And we talked in yesterday's video about, well, this could be a triangle like this, and then we have a breakout to the upside, to the downside, or this is still a W pattern. Well, with this touch here on the top, I think I have to favor here this triangle that we are forming right now. You can also see, especially here on the bottom, that we have quite a lot of touch points, so it's going to be interesting to see if we're going to break out to the upside and downside. Actually, we should have already broken out, because this pattern is maturing more and more and more. Usually the breakout is somewhere between 70 and 75%, and we already reached that point. Usually the further we go into the apex moment, the more severe the breakout is to the upside and to the downside. Now let's say that we will break this triangle to the downside, and we'll just take a classic measurement tool. Then we will end up somewhere, let me put this here, let's be conservative, at approximately 14,500. If we would do that to the top, and I think yesterday I might have mentioned a wrong target for the W. This is 25k if we would break out here, and I think for the W yesterday I said a bit of a wrong target, because I think I used this measurement, and then I think let's do it in here to the top. This may be a little bit better. Let's say I am wrong and this is actually a W, and then we are breaking out. We'll put this right here. Oh, sorry. And let me see where that is. Then we will target here approximately also 26k. Yeah, to the downside, actually not really the way to measure it, but then we would come somewhere actually also here at 15k, so not a lot of difference compared to the triangle. This is actually really a classic market make a move, just signaling and tingling that this is the bottom. Then we are pumping up on the 4th of July. A lot of people thinking, man, we are missing the bottom. Quickly go in, favoring higher prices, and then just start dumping the price lower. But if you you don't have any experience with Mr. Market, or sorry, with market makers, then you could just have traded this triangle pattern and would just have been totally fine. Of course, support and resistance. First on the downside, our support here is this support of the triangle. That's now approximately 19,100. Then we have the value area low here at 18,900, and then we had that box where we had a few dips in. That is somewhere between 18,000, let's say 18,750 and 18,400 ish. I am going to be honest, if we are breaking out and we are losing this bottom right here, so this whole sector, then I'm afraid it's gonna go very fast to maybe 15 or 16k, because that would be pretty bearish, and I don't think we are going to make new lows. Let's say that we are still in a W pattern, then you also want to see these kinds of levels hold. Then we have a slight higher low, and then we can just move our way up. But most of the patterns so far in the last few weeks and months just did not play out exactly with the measured move. So we also saw a lot of fake outs, and a lot of times that the target just was not met. If we go to the upside, then of course we still have the top from 2017 as a resistance. That's 19,900 approximately. Then this white line that is right above it, that's let's say 20,200 ish, depending a little bit on when we're going to break out. Then we have the point of control at 20,500 ish, and then we have that box right here that we also had a lot of taps in there, 21,300 to let's say 21,800. Then the highest the volume, the high volume node here on the top, that is 22,200 ish. So yeah, to be honest guys, there's just a lot of resistance above us. So if we are really going to break out, then after this passing this blue line, so the value area high, then I'm becoming maybe a little bit bullish again. But other than that, I just really see these areas as possible fake outs where it's just trapping longs. Everyone thinks that's it, we are going to see a major relief rally, and then the market is turning around and we're still getting that major move to the downside and making new lows. So be very careful. Right now it's just grabbing liquidity everywhere. If we are zooming in on the market cipher indicator, then we're seeing also here on the 4-hourly that is just very ugly. Money is inwards curving, view up lower, momentum wave lower. This just looks pretty ugly. Also on the higher time frames, 8 hour, actually almost the same. Yes, you could argue that here the money flow is coming a little bit up and a momentum wave, but to be honest, it looks like this maybe wants to print a trigger wave. On the daily, yes, we do have that second green dot and the money flow going a little bit up, but that's actually the only thing that's has it going for it. If we zoom in on the hourly, and then we will take the traders reality indicator. This always takes a minute to load. Then you see that we have recovered most of the candles right here, but now we actually have these candles right here open, so we actually should trade now a little bit higher again to cover those. And yeah, we still have a few. No, actually this one is also covered. So yeah, to the very much upside, as in 22, 23, 24k, there we have candles open, but it's not that sexy. To be honest, on the hourly, money flow is still kind of stable. I have to say I'm a little bit surprised by that, but the momentum wave of course is here going lower. Who knows, we might turn around for a little bit, do something like this. That could be very interesting. Yesterday, let me quickly summarize that. We had so many bearish divergences and it was just not playing out. It was very frustrating. I was limiting my way up into short positions and I just sold in a nice profit, so that's nice. But you can see here that here we have a bearish divergence where the price is just making a new high, here new high, here new high, here a new high, and you can just redraw this line everywhere. Also here is then the bearish divergence, then we have here a bearish divergence. Is just insane and we're just not playing out at all. All in all, from the first moment that one showed up, so that is, I think, actually from here measured all the way to the top, we still went up almost 3%. So yeah, if you then in high leverage, you definitely got stopped out a few times. I don't do that, but yeah, that was actually quite the mindfuck, shall we say. Then on the other markets, we're seeing everything pretty much going down. S&P, Dow Jones, Nasdaq. This is for us the S&P. You can see that this has really been the cluster of trading. The horizontal white line has been supportive resistance now multiple times, have been proven to work pretty well. Now we are trading lower again, so we have to see how long that will take. If we are looking at other markets, then we're seeing gold selling off more than 2%, silver 3%. Absolutely terrible. It is I'm being very transparent about this. I am long on gold and silver, but we have high inflation, most likely recession, stock markets are going down. This should be the safe haven. This is why people have gold and silver in their portfolio, so that it protects them in case of inflation and in case markets are going down. Then gold and silver has been seen as traditional stock market, but everything is being sold off to, and so it's absolutely crazy to see. Maybe in the later stage this year we'll recover a little bit, but so far absolutely terrible performance for this year, horrible performance last year, so I'm really disappointed. If you want to see something crazy, then look at oil today. Oil, this red candle that you see right here, that is the daily candle. We are selling off, what is it, more than 8%, I think. Oh my god, look at that, almost 10% already that we're going down on oil. And I said already a few times that sometimes people are taking oil or gold as safe havens, but that is not the case. Everything is just being sold off, and you might be asking, where is the money then going to? Well, the money is going to cash, and then to be specific, the dollar, because this right here, ladies and gentlemen, is the dollar index, and you see these big fat green candles. That is a major pump up here in the dollar index, and it also explains maybe a little bit why BTC is going down, not only because we bounce off that resistance from that triangle, but also because the dollar index is pumping just tremendously. And to put this a little bit in perspective, you can see that we had quite a consolidation here, beautiful pattern actually, just waving around here, and we had this 2 yellow lines that I said could be support and resistance, but you see that the consolidation was in a much bigger move, and now we are making a new high again on the dollar index. I think we can definitely retest those high targets that we set down, I think a few decades ago, between 112 and 120. Right now 106.5 for the dollar index. Absolutely crazy. Should you therefore now run to the dollar and exchange everything? No, absolutely not. This is just now on a daily base. It could be that the dollar index is coming down maybe tomorrow or later on this week, and then you see starts going up a little bit, or money's rotating from the dollar to gold and silver, and they are then recovering a little bit, or maybe oil is recovering a little bit. So these are just the movements in the markets, but I find it important to show you the broader market, so that you have a broader idea of where is money going and rotating, because it has to go somewhere, because there's so much money in the system, and then always something goes up and something goes down with buying and selling. So that is the broader picture that I want to show to you today. You now know what kind of levels I'm looking out for BTC. Be very, very careful. You know what, just for fun, let's also quickly zoom in one more time back into BTC. I actually want to show you, if you want to be if you want to do a day trade, then you know what, let's take the 15-minute, and then let's quickly pull a fib. Maybe this is handy if you like to use this kind of stuff. Then we just do here a fib from the top to the bottom. Well, if you would put it here, the bottom, no, you know what, let's take this wick right here. Then you could say we are right now at that golden pocket, and we're kind of bouncing off. If you would take it one further, so you will take this wick right here, then you can see that we are exactly bouncing off from that golden pocket, and that if you would have put it in a trade right there, then that would have been absolutely perfect. You see the golden pocket here between 19,275 and 19,330, and now just circling within. Now if you're thinking like, hey, you know what, this might be the bottom and we are going higher, then you can also pull a fib and just put it exactly the other way around. And then you can say, hey, until where can we recover? Well, here we have a golden pocket at exactly, or approximately I should say, at $20,000. So this actually could be a nice move up. If we get here and I see some reversal signs, like an M pattern, then I'm definitely piling up on my short again, and then I hope that we can go lower. If you think, hey, you know what, this was actually a nice entry, then you still have approximately, let's see how much you still have to go, 2.5%, 2%, 2.5% if we'll make it to the golden pocket. So that could also be a quite a nice move up there. Let me see, do we also have the VWAP? No, the VWAP now coming in approximately at the 38.2, so that could also be a moment to bounce off. So just be careful with these levels. If you're really trading like on high leverage and you have 1 or 2%, then this is kind of the stuff where you must be looking at right now. Alright guys, that was then really it. Thank you guys so much for watching. Don't forget to like, subscribe, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends who think that's useful, and I see you guys very soon again in the next one. Bye bye.